Good evening, everyone, and welcome to today's FSM1 webinar. Japan's economy is showing gradual improvement, supported by stronger business activity, rising confidence, and growing opportunities across various sectors. Therefore, our topic for today is Japan's equity market outlook, accelerating revival through reversal of decades-long saving glut. We are delighted to invite Mr. Yasuo Kono, a senior product specialist at Amova Asia, covering Japan and Asia ex-Japan equities. He has over 20 years of experience focused on the Japanese market. Before joining Amova Asset Management in 2020, he was head of Japan and South Korea research and strategy at LaSalle Investment Management for 12 years, and previously worked as an equity analyst at Goldman Sachs covering small cap, IT, and entertainment sectors. He began his career at Nikko Securities in 1999. He holds a Bachelor of Commerce in Monetary Economics from Waseda University. Without further ado, let us welcome Mr. Yasuo Kono. Mr. Kono, over to you.
Thank you, Joanna. Hi, I'm Yasuo Kono from the Amova Asset Management. Firstly, thank you for joining this Japan equity session, and I'm very grateful to be here and also sharing the Japan equity market outlook today. So let me share the screen first. Okay, so our Japan equity market outlook remains constructive this year. Japan started to recover 3 years ago, and this year that is even accelerating and becoming more resilient. That's because positive changes on the ground is now extending to the broader segment within the economy. And key to understand why that's happening is reversal over the long term, the saving glut. That is the key to understand why Japan is coming back and why that is more sustainable rather than the cyclical. For today's agenda, so I will walk you through the 3 structural domestic growth drivers, and then followed by growth areas for where particular space in the market and the economy are growing right now. And I will briefly touch on the capital market factors. Okay. So starting with how Japanese economy looks like. So this slide explaining Japanese economy remains the manufacturing oriented. For Japanese economy is well correlated by the manufacturing industry's the momentum. Especially this year, the first quarter 2026, machinery order for that is the leading indicator for the corporate investments that showing the early signs of the acceleration. And historically, once the manufacturing activity accelerates, that revives the entire economy, because manufacturing is still the leading industry for the Japanese entire economy. Then, starting with growth driver number 1, Takaichi's growth initiatives. So Sanae Takaichi became the Prime Minister of Japan last October, and only 1 month after her inauguration, she proposed the 17th growth areas. 17 growth area include many manufacturing industry, as you can see here. I choose these 5 segments as an example, but as you see, many of these growth areas involved and required many material, machinery, and components, and also the final products. Let me take the 2 examples. The defense industry, that is especially important for Japan. The Japanese government finally eased the restriction on the military equipment export. And first deal already occurred, that is the submarine export for production for Australia. Japanese government is currently discussing with other Asian countries, so we will likely see the more development from this segment, and this requires many material component, the IT system, etc. And one more thing, fusion energy. Fusion energy is the more advanced technology than nuclear power. It is safer and more effective. Japan still importing the many the energy, the product from the overseas country. For this segment is also very crucial for the Japanese entire economy. And why these are the Takaichi's growth areas are very long-term the growth areas is all of these areas are more in line with the national interest of Japan. So this is not only about the economic growth, but it is more about national interest. That explains why this driver is very the sustainable and structure. Key feature of Japanese manufacturing industry is that's covered from the upstream to the downstream broadly, not only focusing on a particular part of the supply chain, but you can see including the final products, but also Japanese manufacturer produce the components and material and machinery. Again, that's why once the manufacturing industry is revitalized, entire economy will likely grow. So that is the structure of Japanese economy. And that's why Takaichi administration is currently trying to revive these the 17th growth area. There are already many the developments are happening on the ground. And growth driver number 2 is wage growth acceleration. So Japanese wages finally started to grow 3 years ago, and that has been accelerating and very sustainable driver for the entire Japan economy too. Especially this year, spring wage negotiation will likely conclude at around 5% pay hike for the same employee. So it will likely sustain high level of the household income. Japanese household income is now close to the 4%. It's well above the inflation level. That means now Japanese household not only can accept price hike, but also want to increase the quantity of consumption. So this is also the area where we see the driver for the manufacturing activities, because more quantity of the consumption needs more production. So company need to increase their production capability, and again, that required more machinery, material, etc. And third driver, it is very unique to Japanese equity market, who has been leading buyer in the Japanese equity market. That is actually Japanese companies. They are not investors, but companies. So why Japanese company buy the shares in the equity market? There are 2 reasons. One is Japanese company have been increasing their share buybacks under the pressure from the Tokyo Stock Exchange. And second reason, Japanese company are increasing their M&A activities for acquiring the other companies on the listed market, and they try to grow their earnings through the M&A activity. That's also the outcome from the pressure from the Tokyo Stock Exchange. Good news for investors like us is these money are sticky because Japanese companies are not investing, but acquiring their own shares or acquiring the other company's shares for the M&A. They will not need to take the profit from that activity, but just stay in the with that the equity purchases. So we will likely see no selling pressure from this activity, And that's why Japanese recovery in the equity market has been consistent over the last 3 years and more sustainable. So I introduced the 3 growth drivers. All of these 3 are structural as you saw. And why they are very important to revitalize the Japanese economy and equity market is here. Firstly, why Japan lost decades? That's because company increased their saving. So they didn't use their capital, but saved in form of deposit. And these deposits go to the banking system, and Japanese banks bought a lot of the Japanese government bond. So that is the JGBs. That is how the capital circulated in the capital market, but not in the economic fundamentals. That's how Japan lost decades. However, over the last 3 years, this momentum see the reversal. So Japanese companies started to use their capital, and velocity of the money circulation finally started bottoming out, as you can see. In the meantime, this level of the money circulation velocity is well below the 20 years ago. So it's telling us Japan is now getting out of the lost decades. However, we are still at the early stage of the long-term recovery because this capital circulation just started to recover, but it's well below the 20 years ago. Okay, checking how many companies in Japan have abundant cash. 58% of listed companies have net cash position. So net cash is more cash than debt. For example, in United States, around only 30% of the listed company have net cash position. However, in Japan, or almost double, 60% have net cash. But it showed how many Japanese companies have too much cash on their balance sheet. They need to use it to grow or increase the shareholder returns. And 3 years ago, Tokyo Stock Exchange began the pressure on the listed company to increase the capital utilization. Firstly, dividend hikes and share buybacks that led the capital utilization as a way to increase their capital efficiency. This year, we will likely have the great progress. Other financial authority, that is the Financial Services Agency, the FSA, they will update corporate governance code next month. So they already shared the draft of the new corporate governance code, and they will likely require the company explaining why company do not use cash. Otherwise, company need to use cash more. So in addition to the Tokyo Stock Exchange and also the Prime Minister Sanae Takaichi, the pressure will be added, but from the Financial Services Agency, we will likely see more Japanese company to accelerate capital utilization later this year, and that helps to drive the Japan revival as well. Okay, so moving on to the growth area where we like to invest with our strategies, Japan equity strategy. First one, as we call it, 3 hike opportunities. So we want to invest in the beneficiaries of the 3 hike. 3 hike include the wage hikes, price hikes, and interest rate hikes. We like this type of the growth area for almost 18 months, but it's still progressing and providing the many attractive investment opportunities. First one, beneficiary of the wage hike is here. That is obviously the retail industry. Especially, we continue to like discretionary goods and services because again, wage growth has been accelerating, and consumer want to spend the money more on the discretionary rather than necessity goods. So with this slide, electronic store is a representative of the discretionary goods, and that has been gradually improving, and we will likely see more improvement from this segment. We like this sector. Other part of the retail industry, like such as supermarket, drugstore, they are already improved a couple of years ago, continue to perform well, but we likely see the more acceleration of the recovery in the discretionary goods segment. And price hike beneficiary is here. Price hike are happening in many parts of the Japanese economy right now. However, we especially like the construction industry with that theme, because construction workers have been decreasing in Japan because of the tight labor market, and construction is generally a tougher job, for, especially for the young workers. So they may find the other or the job opportunity outside of the industry. So that is resulting in the fewer competition in this industry for the construction companies. So as an outcome, construction prices have been improving in Japan, and that has been increasing the profitability in this industry. So we continue to like this segment, and we will likely see more sustainable recovery of this industry. And third one, the rate hike beneficiary, that is the banking industry in Japan. So as you can see, the interest rate increase usually lead to the greater performance of the banking sector. So Japan still have the many the banks on the listed market, including the three major banking groups, and also the many other the regional bank as well. So its segment provide the attractive investment opportunities for us, and we like this. Bank of Japan are still in the middle of the rate hike cycle. We will likely see the additional interest rate hike later this year and also the next year. So banking sector will be supported by that the rate hike. Additionally, Japanese bank also have the abundant asset on their balance sheet. So they have the room to improve the shareholder return, such as the dividend hikes and share buybacks. Especially the fiscal year at the beginning, many banks already announced the additional share buybacks program that's supporting the share prices too. So this segment, interest rate will continue, and that's supporting the performance of this the banking sector. Okay, so this is the free hike opportunity, and especially since the late last year, this new opportunity emerged, that is the Takaichi growth initiative, as I mentioned earlier. I picked the semiconductor industry as the example, and firstly, on the left chart, that described how the Japanese government tried to revitalize the Japanese semiconductor industry. So firstly, on the center line, design part, Japan lost the ground in this segment of the semiconductor industry long time ago. Design is now dominated by NVIDIA, and also production part that is now led by TSMC and etc. So, however, in other segments, Japanese companies still have the great competitiveness advantages. They are material segments and equipment segment. So what the government is trying to do is they support the center line first, design part and production part. And once the production accelerate, that require more material and equipment and government support benefit extend to the material and equipment segment too. So that is how Japanese semiconductor industry will likely be revitalized in the future. That's actually already happening. On the right, this is the list of the new semiconductor related factories in Japan. Near these new factories, more suppliers such as the material equipment company also need to increase their production to, build their business. Let's take the one example that is the Rapidas located in the Hokkaido. This is the sort of Team Japan semiconductor company. It is a relatively new company established in 2022, and it is now supported by many leading Japanese companies such as SoftBank, Sony, Toyota, Honda, NTT, etc. Rapidus is now more than 30 shareholders in their structure of the joint venture, and they already succeeded producing the 2 nano chip. And this year, especially, they found the first customer that is the Canadian AI company. This Canadian company will use the Rapidus chips in the future. And additionally, Fujitsu also decided to use the Rapidus chip in the future. So Rapidus will likely move on to the mass production phase next year. It is the time when they require more material and equipment. More Japanese suppliers will likely have the benefit from that the great development with Rapidus. And as you see, many other parts in Japan, we have the very similar development. They also are accelerating the production, and that needs more material and equipment too. Okay, and then how Japanese semiconductor industry, the ecosystem looks like. This is the list of the Japanese semiconductor related company. We see the many companies here, and especially Japanese manufacturers are good at back-end process. That is more important, especially for the AI chips. And under the back-end process, almost half of these Japanese companies have global top market share in their respective segment. So they benefit from the global AI boom as well as Takaichi's growth initiatives in the domestic market. So they having the double positive impact from the AI trend. Okay. One more the growth area that is the rising in Japan, that is the rare earth project. Because of the tension between China and Japan, Japan need to decrease the dependence on the Chinese rare earth, and they need their own rare earth source. That's the beginning of this story. And this year, especially, Japanese this project succeeded finding the rare earth mart near Japan. So there is a tiny island called Minami Torishima, and around that island, there is the huge mart of the rare earth. It covers Japanese youth for more than 200 years. So that is a great development, and we are anticipating many Japanese companies will be involved into this national project. So, the lastly, checking the valuation of Japan equity market. So this is the PE ratio, and you see the PE ratio in Japan still close to the historical average after 2010. Even when we saw the 3-year great performance of the market, valuation level is still close to the historical average. And additionally, between the 2010 to 2022, this is when Japan had very low or almost no growth potential at that time. In the meantime, currently, Japan is getting out of the lost decade and moving back to the growth mode. We won't be surprised if valuation will be improved and go back to the previous cycle for what is the before the 2007. That is when Japan had some cyclical growth, but valuation were higher than the current level. So combining this the very sustainable earnings growth momentum and valuation upside, we will likely see the solid performance from the Japan equity investing over the medium term. So this is our the Japan equity market outlook. And again, Japan has the 3 domestic structural drivers now, and benefit are now extending to the various areas within the economy. So that's why Japanese recovery is now more resilient and sustainable. And more importantly, in this the global the economic environment, it is always great to have the diversification effect away from the global economy exposure or the US equity exposure, because now Japan has the domestic, their own drivers that offer the great diversification effect to manage your performance and also the risks. So that's we have what we have, and I'm happy to take any question if you have. So please um, share your question on the chat space, I believe. Thank you. And while we are waiting for the question, I will share what kind of the question recently arising about the Japan equity market. Very frequent question is, of course, what is the currency for JPY? The currency is often very volatile, especially in the short term, but long term trend, we believe it is still in the direction of the JPY appreciation rather than the depreciation from this level. USD JPY, it is close to the 160, and 160 is regarded as a break-even point for the entire Japanese economy on a net basis. So that means JPY depreciation benefits exporters and global companies in terms of the earnings in the JPY terms. In the meantime, JPY depreciation has some profitability of the importers. So net, 160 is regarded as a threshold, and that means Japanese government authority, Bank of Japan, they don't want to see the significant depreciation from this current level. So, or instead, the central bank continue raising the interest rate, that usually puts the upward pressure on the currency. So that's why Japanese currency is now in the more appreciation direction instead of the depreciation, especially over the medium term. Short term, it could be volatile, but its volatility could offer the great entry point to the Japanese equity market if currency got volatile.
Hi, Mr. Kono. I think we have some questions in the Q&A chat box. There's about 12 of them.
Oh, yes. thank you for the question. Oh, there are many. Okay. Thank you for that. Firstly, first question, BOJ expects inflation to rise this year and that could increase the interest rate in June. Yes. Will that limit corporate investment? Our answer is no. So that is very the right question. And it is one of the important part to discuss. So it is very true that market currently expect BOJ to increase the policy rate, but likely in June. And in the meantime, why central bank raise the interest rate? It's because of the inflation. But in Japan, it is the end of the deflation. So it's normalizing the policy rate, and that's moving back to the normal mode of the Japanese economy. So decent interest rate that has been rising. In the meantime, that is well supported by improving inflation expectation in Japan. So that means, in short, the good interest rate hikes instead of the bad interest rate hikes. So that means when we see the real interest rate, that is the relevant to the corporate activity, corporate investment, it is still at the low level from the historical perspective. So this pace of the interest rate hike will not likely hurt the corporate investment activity, and in other part of the economy, again, it support the profitability of the banking sector, but limited negative impact on the corporate investment. And corporate investments that already are showing some early sign of the recovery. And as I mentioned earlier, and Takaichi's growth initiative, that is the additional great support for this the corporate investment segment. So we overall corporate investment will likely accelerate, and additionally the corporate governance code and the pressure from the Tokyo Stock Exchange to use the capital corporate investment will also take the benefit from that trend. Thank you for that. And okay, next one, how is the yes. So next one, thank you for that. Question is, what are the odds you see the yen appreciating this year? It is very, honestly, the difficult question to answer. I would like to, okay. So the Mark would like to answer this question. Mark, do you want to address that? Okay, while we are waiting for Mark to chime in, it is very difficult to precisely the timing of the yen appreciation, historically speaking, mainly because that is a combination of the Japan interest rate hike and also the US interest rate trend, and especially because of the oil price surge. It is now the more difficult to predict the exact timing, but only what I can tell you is that in the medium term, yen is in the direction of the appreciation. Okay, so the next question, thank you for the Edwin. How is the consumer spending, which should be one of the important component for sustainable growth? Yes, but seems yet to boom despite income growth and subsidy. Okay, yes, thank you for that. It is the very the right. I mentioned about the wage growth acceleration, household income growth. Has been at the high level by Japanese historical standards, but it have not revived the consumption activity meaningfully yet. Instead, what's happening on the ground is Japanese consumers have been accepting the price hike. And as I mentioned earlier, price hike is one of the key the growth area since the last year too. So they are accepting the price hike, and the price hike improve the profitability of the manufacturers and retailers. So that is what we already seeing. And in the future, we will likely see more the quantity increase in the consumption segment because of the wage growth acceleration and also the job growth, consistent job growth in Japan too. However, it is hard to see from the statistics, but what's happening on the ground observation is there is some part of the segment that's having the increase in the consumption on the ground. It is that includes some sort of the relatively high-end or luxury segment, especially for the some the wealthier the household. For example, some department store operator, they are succeeding the growing the revenue from that segment, and we like that segment in terms of the investment. So overall consumption, the real the consumption growth that have not accelerated to increase. However, in some particular segment, we already seen the development. So we will likely see the more the broader base recovery in the consumption we expect. Second one, how is the household participation in Japan equity market with the incentive roll out earlier, if not mistaken? That's right. Japanese government introduced the tax exemption and program 2024, if I'm not correct. And that's mainly driving the passive investment through the index funds in Japan. Most popular one remain the U.S. equity, but also Japan equity is taking the benefit. However, as I mentioned earlier, the key leading investor, the key leading buyer in Japan equity market is now the corporate sector instead of the household. Household remain the household still have the abundant capital on their balance sheet. However, from the long-term perspective, Japanese aging will likely continue for another decade. So that means Japanese household segment need to save the money more and more. So that could flow into the equity market. But in terms of the aging, that generally demand more the safer asset rather than the equity investment. So bottom line is but Japanese household may or may not invest in the equity market more and more. However, they are not the leading buyer right now. Japanese corporate, that is more structural and already happening on the ground. Thank you for that. Next one, Nikkei have doubled in 2 years. Structurally, how long should be our view to invest and hold? Especially yen has been weakening, which is good for export, but will strain the imports, especially the energy. Please comment. Yes, thank you for that question. Yes, Japanese equity market already the double. I think that's over the last 3 years. And but in the meantime, some of sort of the frequent question is that too late to enter the Japan equity market, or still possible to take the profit? Our answer, look at the valuation level. So even after 3-year rally in Japan equity, valuation still close to the historical average after the 2010. So this rally is well supported by fundamental recovery, not about the valuation. And you see, if you see the chart of the Japanese equity market index, it is very consistent, not volatile. And so it's very different market dynamics, especially from the other emerging countries such as China or the India. So suddenly had a rally and suddenly stop. It's not like what we see in Japan. Japanese equity market recovery is very sustainable, consistent, and stable. Japan equity market sometimes have some volatility, but after that, it's moved back to the growth trend. So it is not too late to enter the market. And currency, yes, that is often volatile, but I think I already addressed that question. So this is in the direction of the more appreciation instead of the um, uh, depreciation from the medium-term perspective. Thank you for that question. And the next one, the Japanese market has been trending very high and valuation getting stretched. How high is the possibility of the correction? Oh, thank you for that. Yes, again, the valuation still close to the historical average, and we still see some upside potential from this current level because of the potential growth rate has been improving in Japan that usually support re-rating in the equity market. And possibility of the correction, it is not very easy to address, but uh, what is clear at the moment is Japanese equity market historically reacted to the global shock. That because 50%, 50% of the revenue come from the overseas business currently. So that's why Japanese equity market sometimes very sensitive to the global shock, such as the oil price surge or the COVID, of course, and the JPY volatility, etc. However, what's the different from the past is Japan now have the fully structured domestic drivers. That is what we didn't have in the past. So since the 2023, Japan sometimes had some volatility, but moved back to the growth trend that's supported by the domestic drivers. So if Japan have some significant correction, that's most likely coming from the global trend. But after that, we believe it will likely have some recovery depending on the depth of the correction and because of the domestic drivers now. Thank you for that question. And next one from Edwin, thank you. Will the fund invest into the defense sector as the government now pushing for the spending in defense? Thank you for that question. It is very timely question too. I'm sorry, I'm not supposed to talk about the fund for you in Malaysia. So I think that our the folks, John and Mark, will take care of your question offline. Thank you. Next one, what if the possibility of the rate hike in Japan possible of the causing unwinding of the carry trade and correction in the stock market? Yes. Okay. Yes, so the rate hike will likely occur over the next 1 to 2 years. Bank of Japan still in the middle of the rate hike cycle. And in the meantime, it's called the unwinding of the carry trade or not. It is also a very frequent question. Thank you for that. If you remember, the August 2024, Japan had significant JPY appreciation, and then that led to Japanese equity market correction suddenly. That's because of the unwinding of the JPY the carry trade. And what's different from that the time is after that, carry trade outstanding position is now close to the zero. So 2 years ago, more investors were selling the Japanese yen against the USD, and then they suddenly unwound Japanese yen trade, and then that caused a significant JPY appreciation suddenly. However, right now, uh, the carry trade position has been reduced because again, Japanese yen is in the direction of the appreciation more than the depreciation from the longer term perspective. So it is risky trade now uh, to sell the Japanese yen against the USD. So that means we will not likely see significant sudden Japanese yen appreciation, but it should be more gradual over the next 3 to 4 years. Next question, which one is better? Okay, so I leave the fund-related question to the Joanna or Mark. I'm really sorry about it. And the next one, how about the yen? I think I addressed the yen outlook. And next one, what is the risk-reward ratio of the Japanese stock with Korean stock? I'm sorry, the Korean, so I'm not in the position to talk about the Korean stocks too. But generally speaking, Korea also having the very similar, the great the driver for what is the corporate governance improvement, the value up, the initiatives, but partially similar to Japanese stock, but the context is different. So I would say both of the country, also the Singapore equity, they have the very strong driver right now, and all of these three are the very attractive investment destination. Next one, also, can you recommend, oh, sorry, about fund, so I leave to the folks. Next one, how the important inflation affecting the stock market, crude oil price has been hovering, yes, USD 100% for the past few days. Yes, thank you for that. For the crude oil price surge, that certainly had a negative impact on Japan, but only temporarily, one-off negative impact. In simple calculation is a 10% oil price rise translate to 1% plus earnings decline. So that is the simple calculation. And currently, oil price already increased by 30 to 40% from the pre-Iran war level. So that means that decrease the potential Japanese earnings growth rate by 3 to 4%. So that is the simple calculation. And that's why Japanese equity market declined by almost 10% in March. And equity market priced in that negative impact from the oil price. After that, equity market already recovered well and fully recovered to the pre-war level because Japan just had full year earnings result season. Japanese fiscal year starts in April. From late April and May is the time to have the many earnings guidance from the companies too. And as a result, many investors reconfirm that Japanese earnings will remain on the track of the long-term recovery, and market reacted and market recovered sharply. So the oil price that would be the very the causes of the short-term volatility in the equity market. But unless the oil price stay at the higher level than the current level in the future, I believe it will no additional negative impact on the equity market, but because that's already priced in. Next one, when you mentioned medium term, how many years? Yeah. Oh, thank you for that. I should clarify that. Yes. For I often mention the medium term perspective, whether it's sustainable recovery. Usually, I mean 3 to 5 years when I mention the medium term. So for example, JPY should be in the direction of the appreciation from the term perspective. I mean, that is the 3 to 5 year horizon. And market consensus, for example, JPY is expected to appreciate by around 10% or less over the next 3 years. So that is translate to the around 3 to 4% negative impact on the Japanese earnings. But again, 3 years and only 3 to 4 year, 4% cumulative negative impact on the earnings. So that is relatively manageable negative impact from the JPY appreciation. Thank you for that clarification question. Next question was very similar, so thank you for that. And if the Amova Asset Management, same as Aham Asset Management, oh, thank you for that. Oh, yes. Amova and Aham Asset Management is a different company, although we have the very close relation on about the business. And the Amova Asset Management, this is originally Japan-based company, and it was established in Japan. So it is one of the oldest and the largest asset management company in Japan. And so that's why we have the great resources for the Japan equity investment. We have more than 30 portfolio manager and sector analysts on the ground. They are all Japanese, and they work in Japan. So but they are the very crucial part of our performance sources. And we work with Aham in Malaysia, and we always work with them as a great partner. Thank you for that question. Next question. Since the bank will benefit from the interest rate hike, will you increase the share of the investment in banks in the fund? Thank you for that question. Again, I'm not in the position to talk about our fund because of the regulation. But generally speaking, not specifically about our fund, we have been we like this the sector, the bank sector, for a couple of years already. So we like this, and increase the exposure or not, it really depends on valuation, share price movement from here. So we already like that sector. Thank you for that. Next question. Japan long-term demographic issue of aging society would be a drag to the economy and the market. Why we should invest in Japan? Yes, thank you for that question. It's very important and long-term, long-standing discussion. And the answer is already here in the Japanese history with the aging population. So Japanese aging have been happening over the decades, and before Japanese economy did not decline because of the aging population. Aging population usually decrease the potential growth rate. So that is more about the supply side rather than the demand. So that is why often economists talk about aging population as a negative factor for the Japanese economic potential growth. However, what happened in the past is the Japanese economy did not decline because of the aging. because we have the technology advancement that improve the profitability, productivity, that overcome the aging negative impact. So overall, aging have some part of the negative impact in the part of the economy. Again, household need to save the money because of the aging. That is the negative part. But in the meantime, senior household need to spend money on their the living too, and so that is the positive part. And looking at the entire Japanese economy, again, corporate saving, corporate capital utilization is now a stronger driver than the aging negative impact. So overall, it's still relevant to Japanese economy, but aging is just part of the economy, and other greater drivers fully offset the negative impact of the aging. Thank you for that question. Okay, we have the 4 minutes left, I believe. So I want to take the question as many as possible. So next one, you had mentioned that about 58% of listed companies have net cash. What is the percentage among the company in the semiconductor sector? To clarify, the semiconductor sector in Japan is equally attractive for the retail investors. Any other AI sectors that are attractive in the coming 12 months? Thank you for that question. Yes. Some semiconductor-related company also have the net cash position. However, compared to the left part of the Japanese equity market, semiconductor company, a pure semiconductor company, do not have the abundant cash because they need the cash to increase their production capability, technology development. So they needed the cash utilization in the past. So when we try to identify the cash-rich company opportunities, there are more opportunity outside of semicon, such as the very traditional and steady industry, such as domestic demand-oriented industry. That include, for example, the banking sector, construction industry, machinery, chemical industry, etc. So combining these the segment in terms of the cash, net cash opportunity, sort of the suppliers for the semiconductor industry tend to have more net cash rather than pure representative semiconductor companies. So that's some difference on that. The semiconductor industry Korea attractive for retail investor. Yes. Regarding the semiconductor related or AI related opportunities in Japan, there are many companies are involved in the Japanese semiconductor supply chains. So not only the particular representative semiconductor company, but also again many machinery company, material companies, they are also involved. So it's for which one is more attractive. It really depends on the valuation. So because of the global AI boom, many representative companies tend to have the higher valuation right now. So that could be the time to look for the other parts of the Japanese equity market with the AI theme. Thank you for that question. Next one, what is allocation to small cap domestic company for now for Japan for the fund? So I leave it to the partner on the fund about the funds. But generally speaking, not specifically to our fund in Malaysia. Overall, our Japan equity team like the many smaller cap opportunities because smaller cap company tend to have more net cash position, and some of them are involved in the the growth area of opportunities such as the 3-hike or Takaichi growth initiative. Thank you for that. What is it?
Hi, Mr. Kono. I think
Yes.
we will
Oh,
take one last question for today.
okay, thank you for that. For skipping the next fund-related question, sorry, the next question, would it be better for investors to invest in the hedged JPY fund or local currency this year? So it's also related to the currency, the discussion. For short-term volatility, it is not very easy to precisely the timing of the JPY appreciation or depreciation. But again, longer term, that is in the direction of the appreciation. For one more things, one more other question to take. As an investor new to Japan equity market, which income fund? Oh, sorry, that is also the fund related. Yes, so I think that all I have already addressed as much as possible. So I think it's time to conclude, Joanna.
Yeah.
And for the rest
Thank
of
you,
the question,
Mr.
I'm
Kono.
sorry. Yeah.
Okay, no problem. Thank you, Mr. Kono, for the insightful presentation. Before we end this webinar, I would like to take this opportunity to highlight that our current fund choice for May 2026 is the AHAM World Series Japan Growth Fund. Enjoy 0% sales charge and earn 0.3% bonus units for every 1,000 ringgit until 29 May 2026. With this, we have come to the end of today's webinar. If your questions have not been answered, or if you have further questions, please feel free to send us an email at investhelp.my@fundsupermart.com. investhelp.my@fundsupermart.com. You may watch the replay of today's session on the FSM1 Malaysia Facebook page. Once again, thank you very much, Mr. Yasuo Kono, for joining us today, and thank you everyone for attending. Good night.
Thank you.
Thank you.